Good morning, good afternoon, or good evening, depending on your perspective on the world. Welcome to my analysis this week. This is Brandon Wendell, Chartered Market Technician. I'm going to be taking a look at the energy markets. I'm going to start off, though, with the US dollar index. And US dollar index did break out of its daily supply as expected from last week when we met. I told you that there was a lot of bullish activity there. So we broke out. We've actually pulled back and retested it with the COVID news. And we'll see if that's going to be able to continue. It does look like we should continue upwards. If we do get any more of a pullback, there is a little bit of a rally-based rally demand here, just above 95 to look for a bounce. As far as our movement upwards, we're pretty much unimpeded until we reach up to about almost 98, just shy of 98 is our next area of supply there. So I expect some bullishness in the US dollar that should continue to put pressure on the commodities, including the energy markets. So that being said, continuing on here, we go down to the dollar 4-hour chart, and we are in a current retracement. You can see basically what we did is we had an impulse, correction, impulse, and our impulse went to a Fibonacci extension of 161.8 before returning down and retracing so far 61.8%. I don't know if we got a lot more left. It looks like we still might go down just a bit more. As you can see, we've gone a bit bearish here in the RSI. So we may continue to see a little slide down to 78.6% retracement, or 95.85 or 84.5 before we get another bounce. But I am expecting a bounce and new highs to be made on that US dollar index. Looking at crude oil on the weekly chart, we had obviously a pretty bad week last week, so we came down right into this daily or weekly demand. We are still holding above 40 on the RSI, which is suggesting that this should hold. If we do open up with weakness on Sunday, which is today, and continue on, and as soon as we break below 40 on the RSI, we will most likely be breaking the lows here as well. And that will obviously change the momentum to bearish rather than staying bullish. We could most likely will break below this 100% and continue to go down a bit. You can see that we had that overdone move on Friday. Looking at the daily chart, big sell-off. We were trying to hold above 40 on the RSI, but that bad news just took us way, way down, breaking prior lows along the way. It's kind of interesting. We just came right into an area of demand. You have rally, base, 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 and then the rally up. Or it can, maybe I see, I guess it could be drop, base, rally right there. Either way, came into a bit of demand. We're well below 40, so I expect a little bounce out of this before we continue to go a little bit lower. And then again, hit those, stay above on the weekly chart before we continue to rally up. So going down to a smaller time frame, there is warning before this happened, by the way. I love that. There's almost always warning before markets really take tumbles. And if you know how to find the warning signs, you don't get surprised by it. In this case, we had a little positive divergence, but when we rallied up off that positive divergence, came into an area of supply, and we couldn't get above 60. That's bearish. So what you see is prices collapsing because we couldn't get bullish momentum to take us any higher. Technically, we were still in a downtrend on this time frame. And now it is very oversold. We're all the way down to 14. 40 is the cutoff for that oversold for me. Sorry, phone vibrating there. Anyway, I do expect some sort of a bounce. This is overdone. This is what we call a novice candle. And often with the novice candle, prices return back to the beginning of that novice candle, the open of that candle specifically, before it continues to move down if it's going to be able to. So I'm expecting a bounce to start on Sunday evening, going into Monday morning first on crude oil before we can continue to go any lower. 60-minute chart, pretty much seeing the same thing. We've moved down 100%. We pretty much duplicated the last impulse down. So I'm expecting a pullback, as I said, to 73.05, 74.24, that area of supply, which is right near the beginning of that large candle that you saw on the previous chart, the 4-hour. And once we do hit that, we should be moving down to our 65 and 63 levels that we have down below. So like I said, we started to see a little bit of buying pressure coming in with the green candle. It wasn't very strong. But Sunday, Monday, I expect a little bit of buying pressure to pull us up, and then I'm looking for new shorts. Pretty much Nat Gas did the opposite here, which is kind of interesting. You see on the daily chart of Nat Gas, we had a positive divergence, two of them, in fact, where prices were making lower lows. The indicator was making higher lows, and next thing you know, we snapped out above the trend line that I watched last week. So if this is going to be able to continue higher, we got a major thing that has to happen. We have to be able to get price to close and have our RSI peak up above 60 and stay there. So we need a daily close that's higher that keeps the RSI above 60. If we can't get that, then we're going to turn right back around with this little false breakout and continue to reach down to the 4.65 or 4.252. So keep an eye out for that. As far as supply goes, actually, we got something here. I forgot to mark it, but you got rally, base, base, drop with continuation of lows. So let's go out to the net. Sorry, where am I here? Gotta find my charts. Oh, sorry, it's not right here. So this was nat gas, January 2022, daily chart. And there we are. So on that daily chart, let me just go ahead and fix this. What I was looking at and just noticing right now is that this might be our supply that we're coming up to be able to continue to see the selling pressure. So you got rally, base, base, drop, new low, new low. So that does qualify. So if we turn around, that's where we're most likely able to turn around, watch to see if the RSI stays below 60 when we hit that zone, we should drop very quickly. If the RSI goes above 60, then we're not going to make new fresh lows. We're likely to just kind of base back and forth and may even be able to push through the area unless we have a divergence. So that's what I'll be watching for primarily to make sure that there's an opportunity for me before I try to get in on any particular trade there. So continuing on, let's see, nat gas, we talked about the daily there. We're going down to the 4 hour. With the 4 hour, you can see we've already tested this area supply twice. We did see lots of bullish activity. First of all, we finally got a high that took us above 60. You see these other peaks couldn't get us above 60. We kept failing and going down and making some fresh lows. This one didn't really make fresh lows, but it was weak. Now we're above 60, so there's more strength. This is suggesting we might still climb a little bit. You really do have a demand here too. You got rally, base, base, rally. About, I'll say 5 point, maybe 1.5. Somewhere right in this area, these two candles right there. So look for a pullback perhaps to that for a buy opportunity until we hit that supply zone I just mentioned on the higher time frame. And you can see that actually I did kind of mark it off here, although we've already tested this. So maybe it's not such a great idea, but we're finally in the supply zone. We do have a negative divergence right now when we look at the 60-minute chart, and that tells me we are going to sell off initially to pull back. I'm not sure if we're going to gap down or not, but we should almost go at least to the open of that green candle. So basically, once again, if I go out to the chart, let's do that real quick again, and drop down to the 4 hour time frame. I've explained what I was talking about here. There's the zone I was referring to right here. You got rally, base, base, rally, 5.148. So I did say 5.15. I was pretty close to eyeballing it. So we make it a pullback to that point. Though we kind of already tested it. We opened up, tested it, and went higher. We go down to 60-minute. There you go. You can see that area's already been tested. So perhaps that's not a good trade opportunity. I'm simply going to wait for the selling opportunities. I think those are stronger anyway. I'm still somewhat bearish on that. Looking at gasoline, we collapsed in gasoline. We were already in a downtrend anyway, so if you tried to buy this move down, it was kind of silly. And hopefully it translates to cheaper gas prices at the pump. But anyway, with Friday's COVID information, obviously gas might be in less demand if people are going to be in lockdown again. So the prices dropped dramatically. And you can see we ran right into the bottom of this demand zone, but we're not going to be able to bounce much because we got a lot of bearish momentum. So I see this continuing to move down. Here we see that our correction impulse basically took us to 100% continuation. That's not enough. Again, we got a novice candle. We might push up towards the 2.1, but if we do, that's a great selling opportunity to take us down to 1.9143 or even 1.8129 longer term. On the 60-minute chart, we might even have a better entry opportunity. As I said, on the last one, we were looking at 2.1, the beginning of that candle, and you could see it's still right there, the beginning of that large candle, but there's also an area of supply above that as well. So your choice, called dealer's choice, I guess, player's choice for our side, but you can either sell when you get to the open of that candle for that novice candle entry that continues to move down. Typically, when I sell just the open of the candle like that, I'll put my stop loss 1 ATR above. So whatever the ATR is for gasoline, which I can show you right now when I go back to my chart. This was RBF 2022, 60-minute. There we go. So if we're looking at playing this, the way I do this is, again, you look at the beginning of that novice candle. It's a large candle with that after move down in price. Actually, this one doesn't qualify. Never mind. And I say it doesn't qualify because I also need to have some other criteria. One of those is having it breaking out of prior lows, and this doesn't. You can see the prior lows are much higher, so it's too risky to put on the trade. But if I were to, I would go ahead and bring in indicators, average true range. And basically, the average true range right now is 0.275. Right there, 0.0275. So you just add that to your entry. So our current entry is 2.0949. And again, I would just simply add 0.0275, and that would give you a stop at 212.24. And that's how I handle something like that. Remove that, ATR, and that's it. So anyway, we're just kind of waiting to see what happens overall. But that's not an opportunity I'm going to take this time because I said it's not truly a novice candle opportunity. So I wait for the zone 212.16, put a stop above 212.16, and I'm sorry, 216, and then target the demand zones below. On to heating oil, also collapsed, also made pretty much a measured move. You had this kind of weird impulse down, correction up, and impulse right to about the 100% duplication of the previous move. Lots of bearish pressure, so we're likely to continue this move down after a small bounce. Once again, you see that large candle, but we're not actually breaking lows. The lows were a little bit higher than this, so it's not the best setup for me. But I do expect continued selling pressure, as we said. So if we can rally up, and we should rally, we get a little divergence. Notice how deep we went here, but we had almost no momentum. That's crazy. There's no reason for prices to go down that low without the momentum. So we should get a good bounce here. And I'm looking at that supply zone at 223.87 to 226.28. And that would give us a good opportunity to get into the market. So got any questions, let me know. If you go ahead and subscribe or like the video, I'd really appreciate that as well. Until next time, everyone, trade safe, trade well, and take care.